And with us right now is Annie Dickerson. Annie, you're the Chief Creative Officer with Goodegg Investments on the web at goodegginvestments.com. Thank you so much for joining us.
I'm thrilled to be here with you and your listeners, Josh.
Well, Annie, what does Goodegg Investments do?
Well, Goodegg Investments, we help people, primarily busy moms and young families, to build passive income for their families through something called real estate syndications, which very few people know about. Real estate syndications are essentially group investments, which is perfect for young families because the last thing you want to think about is your finances and growing your wealth. You just want to spend time with your kids, maybe travel. And so real estate syndications allow families to grow their money and build passive income through real estate without having to deal with all the hassles of being a landlord.
Wow. So I am actually on your website right now. And so kind of clicking around, I'm looking at the portfolio right now. So you've got over 8,000 units. Is that right? Can you tell me a little bit more? So I think I know what syndication deals are, but maybe and I really don't. I mean, I know a little bit, right? So we're all kind of pooling our money together so we can get something good.
Exactly.
And so it's helpful because then you have someone, well, I'll let you explain it.
Sure. So
I think you know about it a little bit better than I do.
Yeah, I might have spent a little bit of time with it.
Yeah, right.
So when most people think about real estate investing, which is what, I've been investing in real estate for over 10 years now. And the first, I'd say maybe 7 or 8 years, I had no idea that real estate syndications even existed. I thought that the only way you could invest in real estate was through buying a rental home, finding a tenant, renting it out, and collecting rent, like Monopoly taught us, right? And so that's what I did. But where real estate syndications are really cool is, just like you said, you get to pool your resources together with a bunch of other investors. So now, instead of me taking, let's say, my $50,000 and buying a single family home, now I have $50,000, let's say, and you have 100,000, somebody else has 50,000, and we pool together maybe dozens, sometimes hundreds of investors. And now, we have a good pile of money. We're not going to buy a single family home. Now we can buy something much bigger, like an apartment building. And so through buying an apartment building, we get a lot of economies of scale. So rather than, 20 different roofs that we have to fix with 20 single family homes, now we might have 20 or 200 units under a single roof. And so it's really, in many ways, it can be a much better investment than one house at a time.
Yeah. So would you tell me a little bit more about ROI from a large multi-unit apartment building versus, all the little greenhouses?
Yeah. Yes. Well, as you can imagine, the returns, the projected returns vary from deal to deal. But basically what we look for in the deals that we do through Goodegg Investments is we look for about a 7 to 8% cash on cash return per year. So what that looks like is, let's take an example. Let's say you have $100,000 to invest. The minimum is typically $50,000, but $100,000, it just makes it easier for nice round numbers. So let's say you have $100,000 to invest. And so you can expect, typically our investments are over a 5-year hold time. So you would invest that money for a period of 5 years. And during that time, we're doing all the renovations, we're bringing the rents up to market, we're increasing the value of the property and improving the community overall. And so during that 5 years, you're getting either monthly or quarterly cash flow distributions to the tune of about 7 to 8% per year. So on $100,000, it's about $8,000 a year, or about $667 a month. And of course, that's not all, because at the end of the 5 years, we'll have improved the property And commercial properties, unlike single family homes, those little greenhouses, are valued not based on what the neighbors are valued at, but commercial properties are based on how much income that they can generate. So remember, during these 5 years, we're improving the property. We are bringing the rents up to market rents. And so now the property at the end of 5 years can generate substantially more income than it could when we first bought it. So now we're going to sell it. And the profits, typically we project about 40 to 60% of your original investment. So let's say it's, that's right.
Like 5 years time?
In 5 years. So you go in year one with $100,000. Over the span of 5 years, you're making about $8,000 a year or $40,000 over the 5 years. And then when we sell, you get another, let's say $60,000. So all in all, we aim to double your money in 5 years' time.
Oh my gosh. Well, so there are people that are listening right now that are just kind of nodding, well, yeah, I mean, that's, and I'm like, this is like, I had no idea on the exit. I always thought it was just okay, we're all going to buy this. We're going to make, 7 to 8% a year. Okay.
Right.
That beats the, that probably is, that's a good ROI, but that exit is fantastic. That's incredible. And then, of course, you probably, if you have a long-term strategy, you want to take that and turn that into the next deal.
Exactly. Well, this is where this strategy is so powerful. This is why we only hold for 5 years. Some people think, well, don't you want to hold it for a longer period of time? Well, that is one strategy, is to buy and hold for a long time. And a lot of single-family investors do that. But with these syndications, as a passive investor, you don't have to do any of the hard work of managing the renovations. We have a professional team that goes in. It's almost like a fix and flip on a massive scale. So we're turning over hundreds of units, and that drastically increases the equity in the property in a very short time. So we want to sell because we don't want that equity locked up in that property for a long period of time.
That's just amazing. Okay, so like, what would be an ideal property that, because if I'm looking at the portfolio page, I see that there's properties under management or properties that you've worked on kind of across the country.
Yeah, so the market is one of the main things. So the main two things that we look for are the market and the team. So most of our properties to date have been in Texas and the Southeast. And you're in Orlando, and we have some property
I'm in Orlando.
Orlando as well. It's a great growing market, and I'll tell you why. Orlando, just like all of the other markets that we invest in, has a ton of job growth. And where there's job growth, people start to move there. And so there's a lot of population growth that results from that. And Orlando, just like all of the other markets, has a lot of job diversity as well. So it's not relying on just a single industry. So if one industry goes down, you still have the other ones hold it up. Right. So if Disney World closes, there's still, it's not just relying on tourism. There's a lot of consulting and tech in Orlando as well. And so we look at the job growth, population growth, and job diversity in the markets. And then once we find good markets, we're looking for good teams to partner with in those markets. So those are sort of the boots on the ground. Both the property management team as well as asset managers and operators who will then be managing those ongoing renovations.
Yeah. Okay. So, I guess there's probably some good tax strategy, and I know you're not necessarily a tax accountant, but are there any general guidelines, rules of thumb, or like why this is an advantageous investment to make from a tax perspective?
I'm so glad you brought that up, because that's the one area that most newer investors don't even think about. They're always thinking about the returns. They don't think about the taxes. But the veteran investors know you invest in these real estate deals for three main reasons. One is cash flow, the second is appreciation, and the third leg of the stool is tax advantages. And so one of the coolest things about investing in these commercial properties is that you can take advantage of accelerated depreciation and cost segregation. And I know those are big words, so let me break that down. So on a single family home, you get to depreciate the property over 27 and a half years. And so every year, right, you depreciate the same amount until the whole value of the property is written off on a 27 and a half year schedule. Well, on a commercial property, it's a little bit longer. It's closer to, it's almost 40 years. So you can imagine if we're only holding the property for 5 years, that's almost 35 years of depreciation that we're not going to take advantage of. So there's a thing called accelerated depreciation, and a big part of that is something called cost segregation. And so basically what this means is we hire a cost segregation specialist to come in. They've got their little clipboard and they're looking around, they're looking at the property, all the different parts of the property. And they're like, okay, we've got carpets over here and these light fixtures and pool furniture and all this stuff. And then they create a report that says, well, those carpets, you don't have to write those off on a 39 and a half year schedule. Those can be written off on a 5-year schedule. And those lights, those can be depreciated on a 7-year schedule, and so on and so forth. And what this looks like is on many of the investments that I've personally invested in these syndications. For example, my husband and I invested in one last year. We put in $50,000 and we got a K-1 for our taxes this year, basically the statement that shows the income and the losses. And it showed that for our $50,000 investment, we had a $30,000 paper loss, all while we were still cash flowing. But we were able to take that $30,000 and basically we didn't have to pay taxes on the cash flow that we were getting. And because my husband and I happen to be real estate professionals, we can also apply those passive losses to our other income as well, which is pretty nifty.
Okay, Annie, I got to tell you, I'm so glad that our paths crossed. I'm really, really excited here. And so tell me about the typical, and you mentioned this already kind of at the beginning of our conversation, but of the typical folks that participate and who's in your audience and who you've attracted.
So we set out from the very beginning. We looked around at all the other real estate investing companies. And as you know, a lot of them are very, how do I put this, formal and professional. And they use a lot of jargon and terminology. And it's hard to really understand what they're talking about or who to trust. And so we set out from the very beginning because both my business partner, Julie, and I are working moms. And a big part of why we got into syndications was to create passive income for our families. We wanted to create a place where other women, other moms, and busy parents of young kids could come and cut through all the noise of all the jargon and the terminology and really understand what this is all about. So we set out from the very beginning to create a very welcoming brand that was very approachable. Yeah. And so I can't tell you the number of times I've typed something like capital injection, and I'm like, wait, delete. Put money in. And it makes such a big difference because then people, they feel like they're talking to humans, And we've had so many people who have said, man, I thought I understood it at this other company, but now I read your stuff and now I really get it. And so we attract all sorts of people. Our primary target audience are busy working moms, but we've attracted a lot of, non-working moms or dads or retirees or young professionals who don't have kids. And I'm proud to say that our investor base is about 50% female, which is very unheard of in the real estate investing industry.
Well, this is really, really exciting. And so again, your website, goodegginvestments.com. Now, you also have, obviously, you'll bring together and pool together investors for your own syndicated deals. But so I'm also looking at the Real Estate Accelerator. Can you tell me a bit about that?
Absolutely. So the Real Estate Accelerator is really our effort to help take everything that we've learned and built through Goodegg Investments and share it with other syndicators, with other real estate investors, so that they can build really strong brands and start to build their own investor following. And so the Real Estate Accelerator is really for any real estate investors or syndicators who are struggling with raising money for their real estate deals or have raised some money but have hit a ceiling. And so through the Real Estate Accelerator, we bring a lot of digital marketing techniques, social media techniques, content marketing, and all of that, so that all of our coaching members can really use what we've built through Goodegg Investments to get a leg up in building their own businesses.
Yeah. Can I ask, so was your first idea or your first deal was like, listen, we're just going to start teaching, like, what came first? Like, did you have a deal and then you had an audience, you're like, okay, now we're going to do a deal together? Like, how did those first parts happen?
Well, if I go back to the very beginning, I had never intended to start a business. In fact, I actively railed against it. I had been part of startups. I used to work in the games industry, designing video games. And I saw how hard it was to run your own business. And I said, oh, I'm never going to do that. I'm never going to start my own business. That's hell. I would never do that. But then the universe laughs in your face, as I've learned. So what happened was, as I was learning about real estate investing for myself because I wanted to grow our own portfolio. And as I was doing so, friends and family started to just take notice. They were like, oh my gosh, I see what you're doing over here. You've got all these properties. Will you teach me how to invest in these properties out of state? And I said, sure, pull up a chair. I'll show you exactly how. So you got to research the markets. You got to contact the brokers. You got to get in touch with the lender, fill out the lender paperwork. You got to do the underwriting and then inspect. And I'm going down the list and I just watch people's eyes glaze over. And they're like, wait, you mean I have to do work? Oh, no. I changed my mind. I just want the passive income. I don't want to put in all the work. And I had enough of these conversations to where I realized that people wanted to put their money into real estate, but they didn't have the time or, frankly, the interest to learn how to do it. And so I gathered up these people and I said, well, I can't really bring you into a, like a $100,000 or $200,000 single family home or small multifamily. So I said, what if we did a larger deal together? And so that's when I discovered syndication. So it really was a very organic process.
Wow. Annie, I'm excited. Man, this sure seems like it beats the market. Like if you're looking for a 5-year play in Wall Street or something, but what do I know? I only know what I know. But all I know is I really, I love, like, again, your website, goodegginvestments.com. I love the approachable energy, the branding. I can see why you guys are doing so well. Annie Dickerson, again, what's your position again with Goodegg? What's the title that you gave yourself?
Chief Creative Officer. So I do all the blogging, the video, all the content.
Yeah, excellent. All right. Again, the website one last time is goodegginvestments.com. Oh, and when you go to the website, you have a free 7-day course. right?
Yes. So we have a bunch of free resources. Is it okay if I highlight just a couple of them?
Yes.
Great. So the free 7-day course, Passive Real Estate Investing 101, for anybody who's brand new to this whole concept of real estate syndications. It's just one email a day for 7 days. So that's a great place to start. And then if you want a little bit of a deeper dive, we also have a free hardcover book for all of your listeners. You can just text the word book to 41404. And you'll get all the details there. We'll send you a free copy of our book, Investing for Good, the surprising strategy for building wealth while also making an impact. So that's text book to 41404.
I should point out that you also have a podcast. It's called Investing for Good. So you can just, whatever podcast directory you're listening to, what podcast app you're listening to right now, just search the words Investing for Good and you'll find the podcast. So again, Annie, thank you so much for joining us.
Thank you so much for having me, Josh.